Good evening, everyone. American consumers were busy buying cars in May, and lots of them. Every major American automaker reported sales that were way above estimates. And if this keeps up, the industry is on track to sell nearly 17 million vehicles this year. It hasn't seen that many since 2005. Now, the gains were across the board. Chrysler sales up 17%. It was helped by surging demand for Jeeps. General Motors rose 13%, and that's despite recalling millions of cars. And Ford had its best May in a decade. Sales were up 3%. Investors like what they saw. GM shares rose more than 1%. Ford also higher today. Phil LeBeau has more on why sales were red hot in May and a look ahead to how the summer is shaping up for the automakers.
A big day for the auto industry as most of the major automakers reported May sales that were much better than expected. Depending on the automaker, they beat street estimates by between 2 and 6%. And a couple of storylines stand out. First of all, recalls, particularly at General Motors, are not keeping people out of the showroom. GM in particular reported sales gains of almost 13% for the month of May. That's almost double what many were expecting. Also, this is not a case of the industry sweetening the deal in order to push metal in the showroom. In fact, the average incentive last month was just under $3,000, roughly where it's been for the rest of the industry all year long. And finally, the big focus now will turn on what kind of inventory levels we see for the remainder of the summer. With this May, many are wondering if sales will remain this robust in June, July, and August. And if that happens, will automakers have to increase production? At this point, almost everybody agrees it's a little too soon to say that the industry is ready to build more cars and trucks. By the way, June sales, they're expected to be strong, but not as strong as they were in May. Phil LeBeau, Nightly Business Report, Chicago.
So which other companies may be benefiting from last month's blowout auto sales? Let's get some answers from Jamie Albertine. He's Vice President with Stifel Equity Research. Jamie, welcome. Good to see you. When I thought of which companies might be a beneficiary here, I thought of some of the companies like Masco that make auto interiors, Johnson Controls, the engine makers. You go a different way. You like a couple of dealers.
We do indeed. I think one of the things I would highlight from the May sales result were really two things. The first is retail sales strength across all of the manufacturer, virtually all the manufacturer reports were highlighted today. It tells us that's more than sort of filling the fleet channel, if you will. And the clearest way actually to play the retail sales strength is through the retailers. So we look at auto dealers like Penske and Lithia and quite frankly, in Group 1, our three buy-rated auto dealer names. We think there's a really good opportunity here to benefit from the new vehicle surge, as well as some of the dynamics that are benefiting them in the used and parts and service markets right now as well.
And tell us a little bit more about the parts and service area, because I guess you get a car and you still have to service it and you don't necessarily go to your dealer.
Well, there's warranty service, which is sort of 0 to 4-year-old vehicles, and then there's customer pay, which is, I think, where dealers have a tougher time retaining customers and lose some share to the aftermarket. But the fact that we've seen SAR, so the new vehicle sales, surging earlier in the decade, we're just now getting that benefit in the warranty side of the business. And parts and service is their highest profit channel, or vertical, if you will. So that's a really strong indicator for earnings growth in the year ahead.
One of your choices there was Monroe Muffler, and another one was LKQ, I believe.
So it's a little bit counterintuitive on the service side. I think as a result of more consumers replacing vehicles rather than repairing, it's going to constrain the comp recovery, the comp sales recovery, if you will, at Monroe. That's really good for M&A, and that's one of the most fragmented markets in all of retail. So we like the acquirers, the net share gainers as a result, and that's why we'd recommend MNRO. On the LKQ side, they're an auto distribution company, and we've also been hearing, in addition to sales strength at the retail channel, vehicle miles traveled have been continuing to increase, and the outlook for the summer is actually quite strong. More vehicles on the road tends to make for more collisions, and LKQ is a big distributor into the collision and body market.
Jamie, you heard our report, and Phil was saying that so far the estimates are that June is not going to be as strong as May was. What do you see for the next couple of months of how the auto industry sales are going to go, and what do you think of GM and Ford?
Well, first on the industry, I think you're going to have to see more months in the sort of mid-16 million territory to get to most analysts, including ourselves, expectations for the full year. So we're still modeling 16.25 million units for the full year, 4% industry growth. But it's not unlikely that we're going to trend higher than that throughout the strong summer selling season. As it relates to Ford and GM, I think Ford is really more focused now on a product transition. So they've scaled back production to some degree. They're selling down older units to make way for their new refreshed models, not the least of which is the new F-150 coming late this year, early next year. GM's a different story. I think, as Phil mentioned in his segment, the recall impact has been nil. As we've expected, as Toyota recalls earlier in the decade suggested, there's not a connection to market share erosion. So, GM in the short term, I think any sell-off related to recalls is an incredible buying opportunity for them specifically.
All right. Jamie, thank you very much for helping us tonight. Jamie Albertine, Stifel Equity Research.
Thank you.